Bollinger Innovations has announced a cost reduction plan to streamline operations and preserve liquidity. This restructuring includes workforce reductions and the closure of its Troy, Michigan office, with remaining staff consolidated into its Oak Park facility. Moreover, factory service and warranty support will be discontinued, while its support model for its dealer network get modified. These changes are not related to the discontinuation of any business lines, and Bollinger is evaluating new dealer-driven programs for parts and vehicle purchases. Alongside the restructuring, Bollinger reported a 58% reduction in its quarterly cash burn, lowering it to $8.9 million, attributed to cost-cutting measures while maintaining marketing, sales, and manufacturing operations. However, during the past quarter, Bollinger announced it would be delisted from the NASDAQ due to non-compliance with listing rules, particularly failing to meet the $35 million market value requirement. Consequently, Bollinger announced the intention to begin trading on the OTC market starting October 13, 2025. The decision to move to the OTC market was framed as a strategic move to reduce administrative costs and reinvest savings into its growth strategy. Bollinger CEO David Mitchery emphasized that the transition would offer greater operational flexibility. The company also plans to apply for listing on international exchanges, including the alternative investment market of the London Stock Exchange. Despite the transition to the OTC market, Bollinger expressed it will continue fulfilling its periodic SEC reporting requirements and remains committed to executing its business strategy in the commercial electric vehicle sector. For more on stocks and crypto, follow Ascencore. See you next time.